Good day, everybody. It's your guy here, the unknown, and today I want us to look at something important. I want us to look at how yesterday actually played out because it's the same thing each and every day, and I believe you are actually killing the market, okay? Because it's the same thing we keep talking about that keeps happening. So, guys, without any further ado, let's jump into it. As I always say, if you don't know what you are looking for when you come to the market, you are simply guessing. You are simply guessing, okay? So, look at this, guys. These are the criterias we have. And by the way, I've put all these things in a form of a book for those who enjoy reading or those who want a book format. So it's in the description below, and I'm also adding a lot of things to it. Okay, look, guys, this is the most explosive trading strategy for indices. Okay, and it works for Nasdaq, S&P, and the Dow. Okay, and we have criteria. The first criteria is to identify trap volume before the session, okay? And the second one is to wait for the equity time, which is 9:30 New York time. If you're in South Africa, is 3:30 p.m. and times will be changing to 4:30 p.m. This month, okay? Because of daylight saving time, okay? And again, the third criteria is to identify drop volume during the session. We want to see a chart pattern during the session, and once we have identified a chart pattern, we want to see an evidence candle at the right time, okay? Not just any evidence candle, it must come at the correct time, okay? As I said, I'm still adding a lot of things to the playbook, and those who have it will also be able to get the new one, okay? Because I'm adding a lot of things to it. So guys, once all these other criteria have been met, you take your entry. And on the playbook I said 50 pips, but now I'm adding a lot of things because I've showed you recently how you can target 300, 200, 100 or even more, so that you can maximize your winning days, okay? Which is also highly important. And then of course we always talk about this. It's important to know what type of trends you see, okay? What types of trends you see, because on this playbook, again, I've explained different kind of trends, okay? You don't want to be going against some kind of trends, okay? So this playbook has all the trends you need, which is very important, okay? So guys, again, let's come here. We will be judging our trades based on the tick box and based on the criteria I've just shown you, which again I've put them here, okay? So let's go to yesterday to see how it actually traded out, okay? So the first step, of course, is to identify trap volume before the session begins, okay? So I'm gonna zoom this in so that we can see who is trapped when the session is opening. And when I say trap volume, I'm simply talking about who is at a loss when we are coming to our charts, and we are coming to our charts 10 to 5 minutes before the session opens. 10 to 5 minutes before the session opens. If you're in South Africa, we are coming to our charts roughly 20 past 3, okay, or 25 past 3, and that's when we do the first thing, which is to identify trap volume before the session. Okay, so what we are actually doing here is we are coming to our charts to see who is losing, okay, by the time we come to our screen. And I told you, most of the days they are going to trap above or below the closing price, okay, which is an indicator you can find in my description for free, okay? It's an indicator you can find in my description for free, or you can just search prior day closing price, okay? You'll find the indicator, okay? It's very important. Okay, so these guys down here are actually trapped, okay? These guys down here, why? Because everybody who was sent down or everybody who went down before the New York actually opened is at a loss when prices are here, because it went down and now it came here. So everybody who went down is losing, okay? Please don't ask me silly questions. How do you know who is losing? You already know this because you have been trading, okay? Because sometimes people will say, how do you know that these people are losing? Obviously everybody who went down is losing, and there are millions of people who are participating on the markets on a daily basis, and most of these people are people who just chase prices. They don't know what they are looking for whenever they come to the markets, okay? So the same applies to the Dow here, because we were looking at S&P. Now we are on the Dow. Everybody who went down below what? Below the previous day's closing price. As you can see, this is where prices closed the previous day. So this is where these guys are trapped. Why? Because when we are coming to our session, these guys are losing, okay? They send people down, so these guys are losing, okay? And now let's do that for the NAS as well. We want to see who is trapped when the session is beginning, okay? You see, we are coming here. Obviously everybody who went down is losing when prices are here, because prices are now here. up here, whereas people went down. Okay, so everybody below the closing price is trapped, and as I always say, most of the days they will send people into the wrong direction. Okay, they will send people into the wrong direction during Asia, during during the London session, so that during the US they can punish. However, the reason, or the major reason why we identify trap volume before the session is because some days they'll do something like this. They will send you down back into trap volume. And remember, they just use the entire day to trap these guys. So they have gathered a lot of orders. You know that trapping is where they are gathering orders. You are selling, who is buying? Market makers are buying from you, because we already know that 90 or 95% of retail guys are wrong, right? So who is right? Who is right 95% of the time? It's market makers. Okay, so people are selling, market makers are buying. So from all the people who sold here, market makers bought. How do they log profit? How do they make profit? They make profit by taking the opposite direction to yours, because they will be hitting your stops. And there are many people who don't believe in stop losses. However, when prices go 100 pip, 200 pip, these people are forced to close their trades. Why? Because they are most likely gonna blow their accounts. Okay, most people decide to close trade when the pain is now unbearable. Okay, because they just prefer not to use stop losses. Okay, so that's why they will always send you into the wrong direction before going into the right direction, which is why we always say you must know what you are looking for, and you must always give the market makers an opportunity to do what they want to do. And once they've gathered what they were looking for, you get in when they've shown you that now we are leaving. This is highly important, and this is how we are able to get explosive moves, because we don't want to play around. We want moves that are exploding. We want moves that are moving. Okay, so for us it doesn't matter. Okay, even if we spend the entire day, say for instance we spend the entire day doing nothing, we just want to come at a time when prices are really willing to move. Okay, look at this, guys. At this point right now, these guys are trapped, these guys are trapped, these guys down here are trapped, right? So we go to the next step, which is which one? We wait for the session to open, provided we don't have news. If we have news, we wait for the news to actually trade. So yesterday we had news for me later in the evening. Okay, we didn't have any US news during the session. What do? We proceed to the next step now, which is we want to see a chart pattern. Okay, and I've already said that 90% of my patterns are triangles. I know there are people who say chart patterns don't work, right? Guys, remember, this is a 1 minute time frame. Okay, this is a 1 minute time frame, and a pattern on a 1 minute time frame doesn't make much of a difference, because you're gonna find that it's mostly few candles of maybe 15 minutes. Okay, where on a 15 minutes they can give you a pin, when here they gave you maybe a triangle or stuff. So those are the things you just have to know. Okay, those are the things you have to know. Okay, so now we are looking at them at the same time as I'm showing you on the screen. I know sometimes people think like you have to have multiple monitors or a sophisticated setup. That's not important. The most important thing is, do you know what you are looking for? So looking at the S&P, do we have a pattern? Guys, I've given you a lot of patterns. All the patterns I look for, or all the patterns I use, I've given them on this playbook. Okay, you have everything you need on this playbook. Okay, you have everything you need. Please just master it. Every time I update it, I'm gonna send it to you. Okay, so make sure you master all the patterns I've given here, because those are the patterns that are gonna keep coming on. Okay, so guys, yes, let's come. Okay, do we have a chart pattern here? What do they do? The session opens here. We are not taking the first candle. It's important. Now they go down and they start creeping. So guys, they are just going up. If you look at them, they are just going up. Okay, they are just going up. They are just going up, as you can see. Okay, they are just going up. This is important. They are just going up. Okay, they didn't give you a pattern. Okay, a pattern is recognized when you have multiple points that they keep on revisiting, touching over and over again. Okay, so when we look at US30 again, what did they do? They just went up. Oh, and then they went up, came back to the high, bounced on it and went up. Okay, they didn't give a pattern. Now let's come to the NAS, okay? Because I told you, don't get married to any asset, okay? You don't want to get married to an asset. You want to take the one that is giving an opportunity and that day, okay? And I told you, sometimes the patterns will start before the session. However, they must complete during the session, okay? And at the right time. So now we are going to the next step. Where do we have a point that has been visited multiple times? It's important. A point that has been visited multiple times, okay? You see, they bounced here. Yes, the body's bounced here and the body's bounced here. Already you know that I love touches on the bodies, okay? Yes, they broke out here, but I'm going to talk about this in a moment. And then if you look carefully here, you will see what they did again, okay? You will see what they did. I told you, to identify a pattern, you need points where they touched multiple times, points where they revisited multiple times, okay? So let's look at this. Actually, let me now bring this here. Why? Because you saw that on others they didn't give us any clear pattern, right? So now we want to see, you see, they touch this point, they come and touch it here with the body so perfectly, okay? Here we can say it's the pin, but they revisit it here with the bodies, they revisit it here with the bodies. You already know that I love multiple touches where the bodies are. Yes, of course they broke out. Okay, now let's count. Do we have a pattern? Yes. What is this? This is the triangle. Sometimes, guys, the patterns are not going to be as perfect as you want them to be. That's why I always say, guys, go and back test, go and put hours into doing your work. You will see these patterns repeatedly. And when you back test, please, guys, don't do a week in a day. Just back test one day in a day, because you want to do it in real time. You want to do it as slow as you can so that you get the feeling of how it is when you're on the real market. Because sometimes, guys, you're not going to get a trade so early. You might get it late. So you need to feel the pain of actually sitting in front of the chart, so that even when you come into real markets, you are actually able to sit down on your hands until the opportunity is given. Okay, so guys, if you look at this, okay, let's go back to see. Okay, I'm coming here. We have identified a chart pattern which was important, right? We have found a triangle. So guys, we are starting to fill this box from the pattern. Do we have a pattern? Yes. Okay, you just write yes. And what kind of pattern? This is a triangle. Okay, this is a triangle. Okay, is the pattern perfect? For me, for a pattern to be perfect, it needs to have at least 3 touches up and 3 touches down. So we go back to the charts. You can print this thing and just fill it up as prices are playing out. It's not gonna delay you, because if you have a pattern, still you need an evidence candle, and to get an evidence candle you still have to wait roughly 60 seconds until that candle actually closes. So you can see, you can be filling this on your table whilst you're still looking at the charts. Okay, is it perfect? We need to have at least 3 touches down and 3 touches up. So this is the first touch down. You can see they came and bounced here. This is the second touch, the first touch up. This is the second touch down. From here they went all the way to the other end, okay, and they touch with the body. I take multiple touches from the body. Okay, you see, they touched. So we have 1 2 1 2. Let's look from here. What did they do? They went straight down. And remember, guys, this is where the insiders are trapping. They are sending people into the wrong direction. They are gathering orders. Okay, we don't want to be trapped inside here, hence we wait for the pattern to complete. And this is a 1 minute chart. Okay, some people say patterns don't work, patterns don't work. This is a 1 minute chart. Okay, so we had 3 touches down. All the touches have been met. Okay, is this a touch up? Obviously it went all the way, but okay, it's fine, we can just avoid it. Okay, because the body closed almost halfway, because I want something that passes halfway. Okay, so yes, we can ignore this one. Okay, however, we already have 1 2 3 touches down and 2 touches up. I told you the breakout can be the 3rd touch, and in most cases the breakout is going to be the 3rd touch. So when you look at this right now, we have 3 touches down, 3 touches up. Is this pattern perfect? For me, it's a yes. Okay, for me it's a yes, because of the touches. Yes, they broke out. I'm going to talk about that in a minute. Okay, how much time did it take for the pattern? And the reason we do this is because if the pattern takes above 1 hour, which is above 60 minutes, we are using a 1 minute time frame. Okay, so we're gonna count the bars. If it takes above 1 hour, it is safe to target 100 points. Okay, mostly on the Dow and the Nas, because S&P is more volatile than these other ones. So on S&P you can target maybe 200, you can target 150, of which is something I'm adding to the playbook. As I showed you on the playbook, I said minimum target was 50. I wanted you guys to go and backtest and see these things. However, most of you are not backtesting, and I'm forced to share these things with you. Okay, but I wanted you to learn some of the things. It's not everything that you'll be able to learn on videos. You must still go and backtest. I've linked free tools in my description where you can just download and start doing your backtesting if you are using MT4, or yes, roughly MT4. Okay, why? Because I use MT4. Okay, I use MT4 for all my analysis. However, my executions are on MT5. Okay, I love MT4 because the indicators are here and most of the things work on MT4, and I've been using it for the longest time. But my executions are on MT5 because I'm actually looking at these things at the same time, and I have MT5 open on another monitor. Okay, so here's an important thing, guys. Okay, this pattern is perfect. Let's go to the next step. What is the next step? What is the next step? How long did the pattern take to build out? Okay, for this, it's so simple if you're using MT4 or MT5. But even for those using TradingView, you can still do this, okay? I believe there are other ways you can do this. For me, I just count the candles. You see, I just bring this cross tool here up to this point here. The first number, you see, there is a box generated when I pull prices through. This box tells that there is 80 bars. 80 bars. We are on a 1 minute time frame, as you can see here. 1 minute time frame. And 80 bars of 1 minute simply means this took roughly 80 minutes. 80 minutes is above 1 hour. So it took above 1 hour. So it's safe to target 100 pips, okay, or 100 points, okay. And I know not every day they'll come to your 100. Sometimes they'll go to 70 and return. But guys, you have to know that it's about probability. Okay, it's about probability. You're not gonna win every trade you take. Some trades will give you fake breakouts and you're gonna lose them. It's about probability. Hence, we use proper risk management. I will make a video today later about the mindset and things you have to look at in terms of the mind. Okay, because it's about probability. Okay, for me, I measure everything in terms of 10. I want things that happen maybe 8 times out of 10 times, and I know that 2 times, yes, they will go against me. Maybe they'll go 70 pips and come back. Okay, it's still okay with me. They'll go 50 pips and come back 2 times out of 8 times. I'm looking for what happens 8 times, because if I'm winning 8 times and maybe 2 times they come back for me, I'm okay with it, because this 8 times simply means I'm in very, very crazy profits. The same applies to the strategy. You're not gonna win always, and this is where most people make the mistake. Some people ignore risk reward. That's where they want to go in heavily, and you lose heavily. You lose heavily, you are out. Okay, you lose heavily, you are out. This business is about risk management. Okay, risk management, because sometimes you're gonna lose, and you don't want the loss becoming so big in a way that it's gonna affect your mentality, because once it affects your mentality, your account is good as blown. Okay, this is highly, highly important. Okay, if you lose 30% of your equity on one trade, that account is good as blown. Okay, why? Because it's gonna affect your mentality. Yes, and once it affects your mentality, your account is good as blown. So please follow proper risk management. Okay, because you want to last long. Avoid looking at how much you can make and start looking at how much you can lose, because whenever you protect your capital, you're gonna last long in the business. Okay, protect your capital. I'm more of an defensive kind of trader than an offensive one. I know that if you're offensive, you can make large amounts in one trade, but the moment you lose, your account is good as blown, because that is gonna affect your mentality. You are human after all. Okay, yes, of course we have people who are making billions, but look at them. Most of them are hedge funds, and hedge funds have a lot of equity. They gather equity from many people around the world. Okay, so you might find that, okay, yes, George Soros is risking maybe 2 billion per trade. However, that 2 billion is not too much from him. Okay, it's not a huge portion of his equity. You find that it's maybe less than 1%. Okay, So you don't compare yourself with hedge funds, and mostly this happens to people who are using prop firm challenges. You are so obsessed with passing your challenge, getting the payout. Guys, grow your way up. Remember, you are growing with experience, okay? You are growing with experience. Now let me come back to where we were. Now it took more than an hour, so it's safe to target 100 pips for Nasdaq or the Dow. And for the S&P, you can go for 200. That's why I showed you a trade where I went for 200. And there's now something important. We need to have an evidence candle. I'm going to zoom this out here, okay? We need to have an evidence candle. Let me remove this because I believe it's going to okay, it's gonna prevent us from seeing a lot of things. Okay, so look at this, guys. I'm gonna talk about this fake breakout. Actually, let me talk about it. You see, they touched one, they touched one, they touched two, they touched two, they broke out. You can't take this breakout, okay, because we have rules. We say the evidence candle must be the biggest candle from the last touch above. So this is a very big candle, and guys, if they break out with small candles and keep giving you small candles, small candles, small candles, they are telling you they are not going anywhere. Okay, they are telling you they are not going anywhere. Again, the kind of breakout is very important. How are they behaving once they break out? Because sometimes you'll find them creeping. If they creep, that is more likely going to explode in the direction, okay, already. But that's important for you to know, okay? It's a story of another day. We'll talk about this thing, okay? And I'm also going to edit more on the playbook, okay, because it's important for you to know. But look now. Do we have an evidence candle? An evidence candle is the biggest candle from the last touch, okay? You see, this is the last touch down, okay? This is the last touch they came. Yes, this touch we didn't count it going up, but it's the last touch because it came to the line, okay? It came to the line. It's the last touch. So if we're going to get an evidence candle, we need to get a very big candle compared to the sizes of these candles, okay? So let's see what happens. They break out with a pin. Oh, I know this pin got a lot of you. Why? Because you are impatient. I told you, wait for the candle to close. Why? Because most likely they might give you a pin. Okay, so you always wait for the candle to close. Look at what they did. They gave us a huge candle. Is this an evidence candle? Is it bigger than the candles before? Yes, it's bigger. Okay, and guys, believe me, this candle stands out. You don't have to doubt this candle. It stands out. Remember, you don't have all these candles, right? So you have this candle. Up to this moment, this candle stands out. You can't say you don't see these candles. This candle stands out in a way that is amazing. They just stand out, okay? It's very important to know. They just stand out because you can see we have a pattern and all of a sudden we just have a super big candle. Okay, and this candle has engulfed the closing price. Okay, if you are using the closing price as an indicator, it has engulfed away from the closing price. I told you these are my A plus setups. Okay, if I get a pattern that engulfs, or a pattern that's building up on a line, on the closing price, on the high or on the low, these indicators are free and they're in my description. Okay, if you get a candle that engulfs this level, that's an A plus setup for me. Why? Because this trade shows you that it's gonna go. It's a high quality trade. Okay, but remember, even A plus setups do fail sometimes, okay? But as I told you, I measure things in terms of 10. I want something that's going to happen 8 out of 10 times because there's nothing that's going to happen 100% times, okay? You just need something that happens maybe 80% or 70% of the time, okay? This is my A plus setup. This candle stands out, okay? When you are trading, guys, you don't doubt this candle. It stands out by itself. You don't have all these other candles. You only have this candle. You see how it stands out? This is an evidence candle. A big candle that breaks out. Okay? Important. Okay? Now, do you have an evidence candle? Yes, we have an evidence candle. Here's the last thing, which is the most important thing. If you watch my recent videos, I believe by now you understand what I'm about to say. We need an evidence candle that happens at the right time. I told you, if we have a watch, I want a trade that happens as close as possible to the clock or as close as possible to the half-hour mark. Okay, so I'm only willing to take a trade from 50 to 10 past or from 20 to 40. These are the trades I need. However, I have golden times. If it happens from 55 to 5 past, this is a beautiful time for a trade to happen. Okay, if it happens from 25 to 35, this is a beautiful time. Just go and watch the video. I'm gonna put in the link in the description. Okay, that's where I explain everything in terms of the time of the trade and all sort of things. Guys, this strategy doesn't have to confuse you. Okay, yes, there are times when they will like tweak things and give trades late, sometimes don't give you things, or sometimes just tweak market conditions a little bit, because they know people are gonna cram them, and they know that when they tweak things, this is important, please understand this, they know that sometimes they just shift some things a little bit. Okay, that's why you're not always gonna get a trade. That's why not every month will be the same. You can make, say for instance, you can make $1,000,000. Okay, you can make $1,000,000 this month. Okay, next month you can make maybe 200,000. Why? Because not every month is going to be the same. There are weeks where they might not be giving you the opportunity. They'll just tweak things a little bit. Okay, it happened during January where like they tweaked things, prices were moving late. Then from there, they gave things like they gave textbook perfect setups. Okay, then there was a week, I believe you all remember, when prices were so volatile, everybody was so scared of a recession. That week things didn't really play out because the evidence candle, you'll find 70 pips, so that week was untradeable. Okay, and then again they can like continuously give you a week whereby they tweak things and things don't go in your way, and if you are not following proper risk management, you're gonna lose. And when you lose, you're gonna say, oh, the strategy is not working, this is not working, this is not working, and then you give up everything. It doesn't matter what strategy you are using. At some point you will see that markets will not behave in a way that you know. So when you realize that, you can just sit back. Okay, sit back and watch. That's why we have criterias, guys. That's why we have criterias. So most of the things are on your mind. Most of the things are on your mind. Okay, so I believe you can read something like Mark Douglas, Trading in the Zone. That book will help you with psychology. Hence, we always say psychology holds above 80% when it comes to trading, because the setups will always be there, but it's gonna be in your mind. Okay, so guys, here is the last important thing. What time is the evidence candle given? We go back to our chart. Sorry guys, I'm saying a lot of things because I've seen how these things are affecting people. Okay, so this candle, let's look at the time. If you look down here, I'm bringing this tool again. It shows that it's my broker's behind in 2 hours, right? So it's saying 1406. I told you I'm willing to take trades at a specific time, and I've shared this multiple times, even in my recent videos. Okay, so this is important. It's 06. 06 is a good time. It's 06. We are looking at the times. In other words, it's 1606. 1606. This is a perfect time. Okay, I just showed you the watch, and if you go to my recent videos, I've also explained these things. Even on the playbook, I'm putting the watch, and yeah. Okay, so it's in the description if you need it. But look guys, this is the perfect timing. Let's go back to our charts. When we come back to our charts, this is a perfect trade. This is a perfect trade. And I did say that, guys, your stops are from 15 to 25 pips. The safest one is 25 pips. Okay, because sometimes they will pull back. Besides, we know when they break out, they're gonna do one of three things. They are gonna pull back, retest, and go, or else they're gonna go right away. Hence, I'm a breakout trader. Okay, or else they're gonna break out and reverse. They can reverse to the opposite direction, or they can keep trapping. Hence why I say, if they come to the edge of the pattern, you just let them be. There's no trade for you on the day. And what I simply mean is, say for instance, this is your line, right? This is your line. We can just pull them through. Okay, if they come all the way to the edge, somewhere maybe here, or where these lines cross each other, okay, something somewhere here, that's not a trade. Just let them be. They are not going to give you anything. They're going to keep trapping. We don't want a pattern that goes to the edge. This is highly important. Okay, so guys, they must break out before they come to the edge. You see now, I repeat what I've just said. They are going to break out, pull back, and go. They are going to break out and go, or else they are going to break out and it's going to be a fake breakout. So guys, there are days when you will lose, okay? That's just reality. I'm not going to lie to you and tell you you have a 100% win rate or a 90% win rate. No, I told you, out of 10 times I need something that's happening roughly 8 times or 7 times, because I know that if out of 10 I'm winning 7, I'm highly profitable. Okay, so guys, look at this. Beautiful. What do they do? Where's 25 pips in the first place? Okay, let's see, where is 25 pips? 25 pips is here. Okay, 25 pips is here. Okay, 25 pips is here. If you're putting, I told you 25 pips is the safest one. Okay, and most of the time I use 25 pips, even though I told you it's 15 to 25. 25 is the safest. You want to protect your stops. Okay, so look, I know some of you want 5 pip stops, 10 pip stops, so that you can maximize your lot size. It's not about that, guys. Give yourself or your trade like a fair chance. Okay, give in enough stops. Okay, and don't over risk. You can't get like, you can't get everything you need, like, or get everything in your way. Most of the time they're gonna hit you. Okay, so as you can see, this is your stop loss. This here, this here, this here is what is your stop loss. This here is your stop loss. Okay, this here is your entry. I told you, we already know that they might pull back to retest. And by the way, here we are on a level, so if they're going to retest, obviously they're going to retest the level. They pull back to the level. Oh, I love this. They pull back to the line, and then they go. I told you, the moment they surpass it this year, you enter again. So one thing I always say is, you need to know how to scale and how to maximize your wins. Okay, so that simply means when you are right, you want to maximize. Okay, you want to maximize, and this is one of the best ways, where you enter, they pull back, they don't close you, they surpass this first entry, you enter again, and that's where you can now move your stops from this 25 pips to 25 pips from here. Okay, to 25 pips from your second entry. Okay, so this is roughly here. So you can see now your first entry, yes, you've increased your size, but your first entry is on 15. Okay, never go full size on the first one, because they can still break out and give you another opportunity where you can now go full size. Okay, so you see, you target 100. Why do you target 100? Because we have already spoken about these things. They took 80 minutes to build this pattern. 80 minutes, that's beyond 1 hour. Okay, roughly beyond this is roughly 1 hour 30 minutes, actually 1 hour 30 minutes. So you see, this is a perfect one for 100. And I told you, take your trade, wait for an opportunity for scaling in. Once you get that opportunity for scaling, trail your stops to 25 pip. Don't trail them to break even, because they are mostly going to come to that point, because they will retest. Prices never go just straight. They come pulling back and come pulling back. Okay, so let's see. Your 100 pips was hit in 84 minutes. Your 100 pip was hit in 84 minutes. You see, it was hit in 84 minutes. Okay, it was hit in 84 minutes. I told you, put your entry, put your stops, put your target, get off the screen. You don't want to see these things here, because when you see them coming to retest, you are human. Most likely you might feel scared. You might start like closing your positions, just to see that later they go to your take profit. Guys, to make money, you need honestly to, you need to be patient. So close your charts, take the trade, close your charts. Okay, come back later. You can come back after an hour. For me, it's fine. You can even come back during the evening or the next day. Why? Because the worst thing that can happen, or the damage that can happen, is like they've hit your stop losses, which are 25 pips. Okay, so that's not a problem. And as I told you, I want something that happens 8 or 7 times. So most of the time they're gonna go to your take profit. So easy, stress free. You don't have to be a slave of the charts. You just need your freedom. Get your freedom. You are in, you are out. You are done for the day. Okay, I don't care about the charts. Once I'm in like this, I am closing my charts. If I want to play a game, I'm going to play a game. If I want to go out, I'm going to go out. Okay, Take your mind off the charts. Don't be married to your charts. Yes, it's your work, but guys, this is the easiest form of work that gives you something like freedom. You don't want to be a slave, okay? You don't want to be a slave, okay? So you need your freedom back. This was a perfect pattern. I did say sometimes pattern starts before the session. And by the way, if you watched yesterday's video, the pattern also started before. Oh no, the day before yesterday, the pattern started before. Okay, so we just come from this one. I showed you why it's not a valid trade. And by the way, they're sending you back into trap volume so that you can become trapped again. I told you the main reason for identifying trap volume is because sometimes they'll send you into trap volume, you fall for that, and you put your targets down, 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 just to find that no, they just misled you. So it's important to know who is trapped, so that even if they are giving you an opportunity to trap volume, you need to know that you have enough pips for your target before they can even release the trap volume, because most of the days, by the way, they are not going to release them. Okay, so guys, I really appreciate you, and if you haven't subscribed yet, hit the subscription button. Thank you guys. Have a beautiful, blessed day. Today, same thing, same thing. Okay, same thing. Okay, and for those who need the playbook, I have it in the description, and for those who already have it, I'll tell you when I've added all these other things, and I'll send it to you. Okay, so guys, if you need this tick box, send me an email. Okay, unknown. Okay, unknown trader 24 at gmail. Use this one. Okay, send me an email. Okay, send me an email. Okay, okay, sorry guys, okay, sorry, yes, send me an email. Okay, here is my email address. Send me an email. Okay, and request for this tick box. I'll send it to you. Use it to judge your trades. Okay, use it to judge your trades. It's important. I've explained this over and over and over again, so I really appreciate you. Thank you.